I want to welcome everybody to our panel event webinar this evening. We've got some great, smart, talented guys on our panel with us tonight. We're very thankful. I want to do a little introduction and share with you some of the background of the folks that we have with us tonight. So I'll start with Brandon. I'm not sure how everyone appears in your Zoom at home. Brandon, why don't you wave real quick so everyone knows who you are? So Brandon Steele is a certified financial planner with Mainsail Financial Group, which is an independent financial planning firm in Bellevue. His focus is on true holistic financial planning, addressing all areas of finance, making sure to address concerns through the view of a bigger picture. Brandon's been a financial planner for over 9 years and helps his clients address key areas like preserving wealth, managing taxation, and enhancing what's left to heirs. Brandon loves golf and enjoys taking his dog to the dog park and on hikes outside of the office when the weather is good, right? Next, we've got Steven Djordjevich. Steven, do you want to just wave real quick? Perfect. Steve is a certified public accountant and has been practicing public accounting for about 15 years. His office headquarters is on Mercer Island and has another small office on Bainbridge Island as well. His firm specializes in tax planning, tax consulting, tax preparation, and business consulting. He's been married for 8 years. Good show on that. Has a soon-to-be 6-year-old son, Henry, and a 3-year-old daughter, Lucy. And finally, we have Jeff Gilbert, which would be there he is right there. And Jeff is the principal of Gilbert Law Firm located in Mukilteo, Washington. And his practice includes mediation, small business formation and representation, and family law with an emphasis on estate planning, trust, and probate law. Jeff's been practicing since 1991 and has been the principal at Gilbert Law Firm since 1995. And he works and lives in the same community with his wife, Ingrid, 3 daughters, and also serves as the varsity head coach of the Kamiak High School boys tennis program.
Oh, nice.
Yes, there you go. And finally, my name's Adam Lapson. I am also a certified financial planner. I've been a planner for about 18 years, and I'm the co-founder of Mainsail along with Brandon. Whew, okay, so we are super excited to welcome all of you tonight and to hear different professional perspectives on the topics we're going to cover. I think it's going to be great. Lots of wonderful insights, comments. It's going to be really a super session tonight. So if you guys are ready, I think we'll just jump in with the first question and we'll kind of get the ball rolling here. So I think what we'll do is I'll start off with Brandon. So it seems like a lifetime ago, but back at the beginning of the year, the Secure Act passed at the beginning of 2020. And I'm wondering if you can share a few changes that were impactful to you and what it really that act meant to the families that you work with and that you serve.
Yeah, absolutely. I think, I mean, it's crazy to say that was this year. You know, just 2020 has been insane, and it's really, I guess, kind of mind-blowing to think back that the Secure Act was actually initiated on January 1st. But basically, this kind of stuck through the radar, I think, for a lot of folks. But there is some really substantial impacts with the Secure Act. There's a lot more to it, so I'm not going to go into the details of every aspect, and I'm sure the other panelists will have some other pieces that they may touch on too. But I think one of the largest things that came out of this new legislation is the impact to how retirement accounts pass to your heirs. So basically, before this legislation went into effect, when an IRA went to your heirs, and just to back up, when it goes side to side, spouse to spouse is not necessarily the issue, but if it goes down to kids or grandkids is where we start to run into some challenges here. So before the Secure Act, the money that was left in an IRA, to kind of keep this simple, had to be taken out, but it was based on your beneficiary's lifetime. So, you know, that could be over a long period of time. As you might imagine, it may not be a whole lot that they need to distribute every year. But when the Secure Act was passed here in January, they kind of shortened that time period up. So basically now we've got to take those funds out within a 10-year period. That can mean that you take, you know, for instance, $1 million goes to your kids. That could mean that you take $1 million out in year 1. It could mean $100,000 each year over 10 years. But the key is that 10-year mark, all of those funds must be distributed. So I think one of the takeaways, I guess, from this is that although the Roth, which maybe we'll talk about here in a little bit more, but although the Roth still is subject to these issues, the Roth is tax-free, and even when it goes to the kids. So it may not be such an issue if you have funds in a Roth, but certainly can be if it's in a pre-tax IRA, because that would cause some taxation issues.
Good, very good. Jeff, I'm going to swing this question over to you.
Yeah, that's so. Yeah, he hit the nail on it. That's the big impact from estate planning, is that elimination of the stretch IRA. You know, that was a great tool before, and that's been impacted. I was thinking he was gonna talk about the fact that you could now contribute later period of time. You go to 72 rather than 70 and a half, but so there are some good aspects with that, the Secure Act, but from an estate planner standpoint, that does impact what we had been recommending, and a tool that we had been using to lengthen out that period of time, which is in general what any estate planner wants to do, is to defer the time period when you're going to be having to pay taxes off of this. So what I think happens, and Brandon alluded to it a little bit, is probably looking towards potentially converting from a regular IRA to a Roth IRA. And there's a whole lot of potential impacts, a whole lot of things that could be coming down the pike anyway. But that's one of the potential changes that I've seen a little bit in my estate planning. So
Good. All right, Steven, you're up. How about for you?
Sure thing. And yes, definitely to echo what Brandon was saying. Yeah, the Secure Act, when it happened in January, was actually like a really, really big deal, and it's kind of gotten overshadowed from everything else that happened, you know, to the 9 months subsequent to it. But yeah, you guys heard about the stretch IRA. That was a big change. The big thing in my world that everybody talked about is definitely raising the age of these required minimum distributions. So before, when people retired, they had to take out money from an IRA called an RMD, required minimum distribution, when they were 70 and a half, and now they didn't have to do it until they're 72. So basically everyone said, okay, I'm gonna push that off. I'm gonna hold off. The other big thing I was getting questions about a ton when this first came out was people could actually, the age of you contributing to an IRA also basically got extended indefinitely, meaning under the old rules, if you hit 70 and a half, you no longer could contribute to an IRA. But now, as long as you have earned income and you're still working, you could be 95 years old working, be self-employed, getting an income, and you can contribute to an IRA. But yeah, other than that, these other two gentlemen touched on everything else pretty much.
Fair enough. So shortly after the Secure Act, we had a new event come into all of our lives. We had coronavirus and COVID, and certainly changed the way things were done. Congress moved swiftly. They passed something called the CARES Act. So I think, Jeff, I'm going to start with you. What were some of the important pieces of this new legislation, and how did it have an impact on the folks that you work with and serve?
yeah, generally that was from just a pure estate planning standpoint. It was a little less impactful than the Secure Act. Designed to give some aid to individuals. And Stephen can talk on this a little bit more, but the notion that you don't have to take the required mandatory distributions this year. So there was some basic relief. I think the idea is, again, from my practice, it's, and we'll touch on this a little bit more, of just about, hey, let's think about, this is a big wake-up call to make sure we're starting our thought process on planning on what we're going to be doing here, just your basic estate plans. So
sure. Steven, you want to go ahead and pick up on that thread?
Yeah, absolutely. So the CARES Act in my world was huge. This is basically where the government was saying, okay, coronavirus is here, it's here to stay, there's economic hard times ahead, what are we going to do to kind of help people out? So the big thing that happened with the CARES Act that was probably the most visible for everybody was the stimulus payment that came out. I think it was like maybe in April, if I remember correctly. But if you remember, yeah, if you were a household, a single person making, I think it's less than like, I can't remember off the top of my head, but you could get a check for $1,200 for a household, $500 per person. So a household like $2,400, and then $500 per child. That was a big thing that came out of the CARES Act. Other things that came out of the CARES Act that were also big were people could take money out of their retirement accounts, and up to 100,000, and the 10% penalty would be waived. Basically, the government trying to offer some relief to people who are now getting hit pretty hard financially. There's talk of a possible another stimulus payment coming that's almost kind of like a CARES Act 2, which might be coming down the pike here, even though we haven't seen any legislation for that yet. But then some other kind of big ticket CARES Act items. As Jeff mentioned, they stopped all required minimum distributions for the 2020 year, so people did not have to take out money if they don't need to and incur that income that's unnecessarily. Then the only other thing that happened in my world, which was pretty small from the CARES Act, is people who typically do not itemize their deductions, people who typically take a standard deduction, could actually make a charitable contribution and take a deduction for that, up to like $300. So not too substantial, but it was a change.
And Brandon, why don't you pick up from that?
Yeah, I think I'll piggyback, piggyback a little bit on what both Jeff and Steven had talked about, which is the required minimum distributions being waived. I think, from our perspective, that was probably the biggest thing. Again, there's a lot to it, but one of the bigger things that came out of it. And I think when you combine the no RMDs for 2020, the Secure Act, and then, especially if you look at like tax brackets from the tax cuts that are still around, that kind of combination can really create a lot of opportunity for what all the panelists have been talking about as well, which is the Roth conversions potentially too. So I think the RMDs were one of the bigger things, and especially when you start to kind of like pair this stuff together, there can be some real good opportunities, I guess, with everything going on.
Perfect. Absolutely. It's funny, we were talking at the very beginning about how we've been using the word like unprecedented and interesting and, challenging to describe 2020. It's certainly been a year that none of us are going to forget. So I think, Steven, I'm going to start with you. So how has COVID and coronavirus affected what you're experiencing with your clients, just on a more, I guess, on a higher level?
Yeah. So of course, I even hate saying these terms, but yeah, it's just the uncertainty of it all. So I'll get a whole bunch of calls, basically people asking what's going to happen. What do you think is going to happen? A big thing in my world that's been going on, and I want to touch upon, are also, if you guys have heard, I'm sure you've heard of these PPP loans, Paycheck Protection Program. That was something that came out several months ago at the height of the pandemic, and basically how those are going to get resolved. That is what's going on right now, which is people took all these PPP loans out, and now they're asking, okay, what's taxable, what's not taxable, what's forgiven, what's not forgiven. So my business has been affected basically by people saying, hey, Steven, what do you think is going to happen economically? And what do we do with this PPP loan? Are we going to have to pay tax on it? Or is it going to be forgiven? Are we going to have to pay it back?
And the answer is, no, I'm just kidding. Just joking.
The answer is most of it should be forgiven.
Sure.
I personally even think the government is the forgiveness application is really now kind of underway. I actually think the government is going to forgive kind of everything. It was limited to some things were forgiven, some not. I think everything's going to be forgiven eventually.
Brandon, what do you think?
Sounds like you're going to be busy for a while there, Steven. I think from my perspective, it's probably the obvious one, right? March and April, or I should say March, really, February, March, where the markets were down so big. And so it was a huge topic of concern. If we look like, just to kind of back up a little bit, we go back to 2019, we had this crazy year in the markets. 2020, we were kicking butt, like we were picking up right where we left off. And then COVID came and kind of smacked us right back down. So, I guess to be fair, luckily we had, a good amount of cash, and we had kind of played a little defense in that position. But that was the biggest thing, I think, from all this. The interesting thing was, though, when we look at like other market corrections, it felt like the conversation from clients wasn't as much around the market. It was more about like health, and, I think people understood the seriousness of all this. And so it seemed like that was really a lot of the conversation, not necessarily the market swings that we saw. I think the quick rebound probably helped a lot. This was still, the markets were still down where we were in March. I might not be saying the same thing. So I think that helped. But, that, and then some of the proactive stuff around all these legislation changes, I think that had been more of the focus than the markets themselves, actually.
Gotcha. And Jeff, how about for you? What have you noticed?
Well, again, just kind of the big picture is it's taught me to be a little bit more empathetic with my clients. I mean, we've all been in this mess, and I have a solo practice, and I have to learn how to interact with my clients in a safe way. And you've got a lot of people that have lost their jobs, and it's I need to do that as an estate planner anyway, but sometimes, it's not immediate like it has been. I mean, we're all in this situation. We all have businesses, and we're interacting with clients every day and staying safe. And so, that's that's one of the aspects I take away, immediately from it.
Sure. Brandon and I were talking a little bit earlier today about some of the differences that we've seen when we have conversations with folks, and a lot of the challenges that people are facing are the side effect of a health challenge, right? That's really where all of this began, was from a health concern and a health challenge. And so a lot of the conversations and feelings have really been around that. A lot of folks are really thinking more about their own health and their mortality this year more than ever before, I think. So I think, let's see, Brandon, I'll start with you. What are some of the things that people should be considering with respect to their health and mortality, during this time, I guess?
Yeah, I think so. I'm really excited to hear, especially, I guess, no offense, Steven, but hear what Jeff says in this category. But, I think that's probably the biggest takeaway was, we try and make sure that our clients are reviewing beneficiaries and getting estate plan documents done and all that stuff. And so I think, when it comes down to it, that's probably the biggest thing, is making sure that some of that stuff is taken care of. I feel like, to Jeff's point earlier, talking about empathy with his clients, like this year, we all started feeling a little more human, I think. Well, our mortality, like you had said, Adam, was a little more I guess a little more on the forefront. And so, I must have had at least 10 clients. Some of you may be listening. I think you probably know who you are, where we had been talking about it, doing this estate planning stuff for a while. And, it's easy to kind of push that on the back burner. But this year, a lot of people had kind of moved that up and really made sure to get that stuff done.
Mm-hmm. Jeff?
Yeah, it has been a crazy year. There's no doubt. I mean, people will call and they're just, and interacting with them safely, but they're just, it's an opportunity to have a little bit to ease the mind. There's a lot of different things that people are worrying about. And when you're doing some estate planning, you're at least checking that box off. I've been doing, in addition to, so I do a, fair bit of, whether you're doing a wills or you're doing the revocable living trust route, almost all of my planning includes some form of a durable power of attorney and a healthcare directive. And so, that's an aspect that whether you're, you've got an elderly parent, and, I get the calls on that. And I was going into the assisted living places before they kind of shut them down. And I remember, I went in initially and they just let you in. And then the next time they're having you sign a document. And then thereafter, it's like, no, you're not coming in.
Right.
So it's really tough, but, it's certainly a lot of power of attorneys, a lot of, just deal with, should I do a will? Should I do a revocable living trust? I want to have something to say, this is, give me some direction as to how I go about this. So.
Mm-hmm. I do want to follow up with a quick question. Are you seeing more of one particular area of estate planning, maybe, or do you feel like just overall it's more?
Well, I think I might be seeing a little bit more lately, probably when we talk about what might be coming down the pike, and we can talk about that a little bit more, but whether there will be some changes with what's happened in the level of the exemption and the threshold filings and all that. that has been, as we get towards the end of the year, that starts to be raised a little bit more. So.
Sure. Speaking of exemption and threshold filings,
Hmm.
we'll transition over to Steven there.
Yeah, and I just to echo what these two gentlemen were saying, yeah, basically I've been getting questions and people have kind of been contemplating their own, existence and all this. And yeah, talking about wills and talking about issues of estate. The only other thing I know people have been talking, because this whole thing kind of served as a reset for people to take stock of their situation, either personally or from a business standpoint. So a whole bunch of people I know in my practice have kind of reevaluated their businesses and said, yeah, do we need to even go back to a work from an office scenario and things like that? And then there's also been other sort of creative things I've seen where people have been asking tax questions, whereby people will sort of set up their own school on the block for their kids and write off some of these expenses. And then, as we've all been reading in the news, I've also had some clients contact me, surprised they're getting divorces. Divorces are up as well, and they'll have financial questions and tax questions pertaining to that too. So yeah, this kind of just opened up the gateway, and people kind of evaluated their own lives and health and everything that comes with it.
Yeah,
and that's a good point, Steven. That would be one thing that, and in fact, I do some family law, and so yeah. There are
through the roof.
Yeah. Steven, I think I'm going to stay with you for the next question. So I don't know if anyone knows, but we have an election coming up very, very soon on the horizon, so to speak. And I'd love to get your take on some of the things that you're considering or thinking about ahead of the election, and maybe some things that clients can be thinking about too.
Yep, definitely. So this has been the question, which is sort of what's going to happen in the tax world, depending on the results of the election. So if you've been monitoring the news or whatever, depending on who wins, things might change. So for example, Biden says he wants to undo all of the Trump tax cuts. So what that really means to a lot of people I've been talking to, these higher income people, and what people in businesses need to consider especially is, it does mean for people, from what we've heard, that there could be a tax law change coming. I wouldn't think 2021, but 2022 is when I think, if anything, would be enacted if Biden won. And basically the two main things that I've been telling people about is if they're high earners, number one, you'll see an increase in the top tax bracket to 39.6%. And then number two, what's really going to impact small business owners a lot is, so when Trump came in, he created this thing called the qualified business income deduction, which is basically for self-employed people, you can write off 20% of your net income. And that's supposed to go away under a new Biden tax plan. So anybody who has pass-through income, rental income, self-employment income, they're going to see a huge bump in their taxable income.
Brendan, you want to carry on with that idea?
Sure. Yeah. I'll, so since I'm probably coming at it a little bit more from the market perspective, I want to preface by saying historically that the election itself does not necessarily drive the market. So just be kind of cautious in terms of investing with your political beliefs. If we look back, some of the folks on the call have heard me say this multiple times, but we look back to the Trump election, and I forget the exact numbers, but like the night before when Trump was elected, the futures markets were down like 1,000 points. When I woke up the next morning before they opened, we were down about 400, and we ended up closing the day up like 600 points. So I don't expect this to be that volatile. I just kind of say that to make a point that the election itself may not have as big of an impact on the market long term as the media might lead you to believe. Now, I do expect a short-term reaction, and probably whoever is elected, I kind of expect that there's going to be a little knee-jerk reaction, but over time, cooler heads kind of prevail. Now, I think, to kind of piggyback on what Steven was saying there, let's fast forward and assume that maybe there's a blue wave, or, the Congress and House stay the same and Trump's elected, and assuming things can get through, what might happen? In that case, the potential challenge, I guess, that everybody's talking about is if Biden is elected, like Steven was sharing, there may be higher taxes. So I think that's something to really consider. Steven's and Jeff are gonna know this stuff in and out, but that may mean starting to explore gifting and things like that if the exclusions may come down. Like, there's a lot to consider there. If I've heard correctly, the Biden tax law is trying to get rid of 1031 exchanges if you own property outside of your primary residence. So there's some things like that to consider within there.
But it's just
Go
to
ahead, Steven.
jump in, it's very hard to speculate for any of us, just because, yeah, I mean, no real tax plan has been proposed, meaning anything that would go to Congress at this point. So
Right.
who knows what'll happen? Yeah.
Right.
Yeah.
Yep.
And I think that's the key, right? That's kind of where I was going earlier, is like, be careful of speculating on this stuff, because it's all, the media loves to act like this stuff's all good and done, but we don't know what's going to come of it. So on the Trump side of things, I think that, if he's elected, that obviously we may see continued trade wars with China. So kind of consider how that may impact your portfolios and your investments. But I think over time, more and more, both sides are starting to see kind of eye to eye on that particular area. So maybe the case either way too.
Mm-hmm. Jeff, what do you think?
Well, I think the point that Brandon made was really good about not panicking, and frankly, the estate planning side tends to do that a lot. We have high thresholds right now for the federal taxation. The amount this year is 11.58 million, and you can, if you're married, you really don't have to do hardly any estate planning at all to get to $23 million without having to worry about paying federal estate tax. Washington State's threshold is a lot lower. The concern would be that is going to significantly change. And so that's what when I alluded to the fact that people are starting to end of the year start to talk about this, they're talking about how to anticipate and to plan in the event that federal threshold comes down significantly. And there are some planning opportunities to gift and gift assets and take advantage of the full amount of the exemption that is available in 2020 that may or may not be there in 2021. So that's one aspect that that I'm kind of talking with clients that might have those issues. The other would be, from Biden's standpoint, one of the really nice aspects of inheriting a piece of property is that you get a stepped up basis. Meaning, if I had a piece of property that I bought for $250,000, it's worth $500,000 at the time that I die, and I give it to my kids, they turn around and sell it. There's going to be no gains off of that. So there's no capital gains, and that's a really big benefit and something that estate planners have been relying on and planning for. Now, so the panic side of me says, oh my gosh, that could go away, and that's what do we do? That's a really big change. I would anticipate that before that happened, there would probably need to be very strong consensus on the House and Senate side. And I would imagine that they're going to carve out some exceptions on the stepped up basis, because it's been a really good benefit. Mm-hmm. So those are two areas that I'm kind of seeing.
Yeah. We'll see, right? I mean, I think that's the theme, is that no one really knows for sure, and we're already starting to speculate on what could happen. Brandon, I'm going to come back to you on this one. So with the different aid packages, stimulus, that sort of thing that were put together when COVID started to affect the economy, it's likely there's going to be some long-term impact from that. Can you speak to what some of those might be, and how we can prepare for that?
Yeah, definitely. I think maybe a question for everybody to kind of ask for themselves is, with everything going on, one of the things that we're kind of watching is to consider like what that might mean for taxes in the future. And this comes back to what both Jeff and Steven just shared about speculating. So be cautious of planning based on speculation. But I do think that there is something to consider in terms of diversifying or spreading out your risk based on what may be ahead. So that's something to consider. If with the spending and everything going on, it's very possible that taxes may go up in the future regardless of the administration. So I think, that's something to really pay attention to, is potential, increases in taxes down the road. I think something else that maybe isn't getting as much attention as I think it should be is inflation. I know the government figures don't necessarily say we're feeling inflation right now, but if you actually break apart what is measured in inflation, the areas that we're actually spending in, like cleaning supplies and some of the stay-at-home stuff, let's put it that way, is inflating significantly. We're not spending on travel and all this other stuff that's not. And so I think that we are already feeling inflation. Like, look at the price of lumber this year, look at gold prices, you name it. And I expect that to maybe continue for some time ahead. I don't expect it to be crazy, but I do think that inflation is something to keep an eye on. And then last is to kind of keep an eye on interest rates. Same with inflation. Like, I don't expect this to be a huge deal tomorrow necessarily, but the challenge is that when interest rates rise, bond prices fall. They have what's called an inverse relationship. And especially for those who are in retirement or looking to preserve their wealth, bonds become a big part of our portfolio. And I think a lot of folks don't necessarily know what they own. And so it's really important, I think, to watch that area and make sure that, you're managing risk, not just with stocks, but with the less risky side of your assets too.
Good. Steven, what do you think?
Yeah, basically to echo Brandon, on the macro level, people do need to consider items like that. And right now, yeah, taxes are historically low, and have been for the last several years. And so what that means is, for a younger person, for example, if they're contributing to a retirement account, if they're trying to make the decision between Roth or traditional, go with the Roth, because if you go with the traditional, you're going to get a tax break now, but when that money comes out 30 years from now, your tax rate will most likely be much higher than it is today. But yeah, good macro issues to keep keep the pulse on.
Yep. Jeff?
Yeah, real briefly, on that Roth is either investing in the Roth or doing doing conversions to Roth and saying, okay, we're going to be paying tax off of that, but that tax rate in 2020 is going to be maybe significantly different in 2025. So that's something that should certainly be considered.
Yeah. Let me ask what maybe a follow-up question, but a little different, but along the same lines. So I think it's probably fair to say that over time, taxes will likely go up. And so if we shift to the long game and we start thinking 5, 10, 20, maybe even 30 years down the road for some of the folks that are watching, from a tax standpoint, what are some of the things that can be done now to prepare for potentially and probably a higher tax bracket, a higher tax environment as we get farther down the road? And maybe I'll start with Jeff on this one.
Okay. So just again, going back to potentially converting and doing Roth, because again, Roth is you're going to get your taxation level at 2020 rather than what's going to happen in the future. The other aspect that I talked about a little bit a couple answers ago was the possibility of doing some gifting now in 2020 if you have for higher worth clients and you're concerned about that aspect of it, to gift assets out of your estate with the anticipation that because of the potential looming deficits and the need for income, that they'd be looking at the exemption levels coming down dramatically. And so that's something I think long term that people should consider.
Mm-hmm. Brandon, do you want to add anything to that?
Maybe briefly. I think I'm going to echo exactly what Jeff said. I mean, Roth contributions or conversions, wherever you're at there, the gift and estate tax exclusion, maybe starting to consider some of those strategies. And maybe there's a good segue into to Steven over there, but when required minimum distributions do come back, There's something called qualified charitable distributions. This is more short-term than long-term necessarily. But, if you find yourself in a position where you don't need those dollars, that might be another way to kind of minimize the tax impacts.
Yeah, Steven, what do you think?
Yeah, I agree. And that's basically what that tool is. Those qualified charitable distributions is when you can take money directly out of your retirement account and gift it, meaning make a donation to a charity or whatever. You get a deduction for it, not taxable, all that. And then the only other thing I would echo on Jeff for people who want to, lessen their tax burden later down the road, you just got to retire early, make $0, make no money, because you'll owe zero tax on $0. So
Maybe that.
That's the one constant we know for sure. No matter.
That's we know that'll be the same no matter what the tax code is.
Right. Well, fingers crossed. Like, we'll hope that's
yeah.
Okay, very good. So I've got one last question, and this is less about the particulars of what we've been discussing, but more on a high level and kind of how we see things going into next year, and as we begin to return to, normal, whatever that might look like. I would ask the question: in your practice, in your profession, how do you think conversations are going to change with clients going forward? Right. So here we are, a year, 2 years later, we can look in the rearview mirror and say, oh, remember that COVID thing and what it did to everybody? What's different in our conversations with clients going forward at that point than maybe what we did recently or a year or two or 5 or 10 years ago? Jeff, I might start with you on that one.
Yeah. And part of that, I think, is, when a client is coming to me, they're already, first of all, I get, I do a lot of kind of phone consultations in advance, and a lot of those people will ultimately come in, but some they won't. And I would say that's probably moving out in these, as an impact of this, of COVID is the fact that whether you're 20 years old or 50 years old or 70 years old, do some planning. This has brought it to the forefront that you just don't know when just the craziness hits, and the craziness certainly hit in 2020. So we don't know when the next event is going to happen, so whether you're at a lot of different stages in your life, you still need to think about what you're doing on planning, financial, tax wise, estate planning wise. It's something that it's a good lesson for us all, that life kind of smacks us sometimes, and it got us in 2020.
Yeah,
so.
No doubt. Steven, what do you think those future conversations are going to be like?
Yeah, it basically reminds me of the 120-year-old motto of the Boy Scouts, which is be prepared. I think that these conversations, it's going to be people and individuals and businesses talking about how can we prevent what happened in 2020. For example, I have a bunch of restaurant clients. I know for a fact, I've had conversations with them. They do not want to relive. There was a month-long period where they couldn't do anything. They had no cash on hand. Everybody was out of money, whatever. And it's like, what do we do? And so I think there's going to be sort of a general attitude shift in terms of preparedness for people to be prepared for something like this. It hopefully never happens again.
Yeah. Brandon, we'll give you the last word.
Sure. I think I'll echo again. I mean, these guys are right on, I think. I think that the planning is key. And I think what we may see shift a little bit is kind of like the clients and everyone's kind of mindset on their planning strategies. I think if we go back to one of the first questions, the question was asking about what we saw this year and how that relationship with the client was going at that point. And although we were very proactive, and I think, clients were being proactive as well, the planning was still important, but a lot of the priorities were around defense, I think. It was risk management, it was health insurance, it was estate planning. No disrespect, Jeff. I think you know what I mean. But I think as we kind of get back out of this and we kind of get back to a new normal, we hear that term all the time. I think the mindset may shift a little bit, where the offense is back in the top of the priority list. So, we get back to the education funding, the retirement planning, the savings, like all that kind of stuff.
Perfect. All right. Well, interesting times for sure. So gentlemen, thank you very, very much. Appreciate your time. Very grateful for your insights and your answers and the thought behind what you had to say tonight. I think that's a good place for us to stop, and we'll kind of draw this first webinar panel to a close. And for those of you that are watching and listening, thank you so much for your time this afternoon, this evening, and we'll see you next time in the next panel event. Have a great set of holidays, Thanksgiving, Christmas, New Year's, whatever you celebrate. It's going to be different this year for sure. So thanks again, and we'll see everybody soon.